Hello traders, not a bad day on the markets. A quick look at the day trading setups today. This is the DAX with the previous day's close. This was the Open, European Open. So we shorted this into the room. You could have grabbed 20 pips, but it sort of gyrated around and it finally went round to the big number, 12,500. So watch out for these big numbers because they are massive magnets in most markets, if not all markets. And then we rotated back to the range and faded at 330. We faded from 611 to 560. Okay, so that is that, and you can see from the way in which we use the 60-minute charts, we dipped underneath this 161 extension down to the 500 and then clambered up. One thing you could do is, this went only about 8-9 pips under the big 500 mark. You could take a big round number like that as long as you're prepared to keep your stop a good 20-30 pips away and then see where that takes you, see where it ends up. Where you end up, where you get to some big numbers like that, it is possible to do that. Just be aware of the risks if it is a heavy downtrend and you are counter trend trading. But that's one strategy you could employ as long as you are prepared for the risk management and you're used to the risk management for that. And I didn't catch the long on this pound. I was very tempted to buy this range breakout here. Backed off for fear of the data going the wrong way. But what I did do in the end was got pretty close up, shorted up here around about the 30 mark. Took a little bit of heat and eventually took it off at so 130.30, and then eventually took it off just for the big number 130 again. So here we are, options expiry tomorrow, and these big charts are gravitating around, rotating around the big numbers. Surprise, surprise. So did the same on the Dow. There's the previous day's open. Didn't trade it around here. Pushed it up into 670 area, which was a resistance area from overnight. Because if I put the rule across the highs, and if you look left, we just breached this at Central European Open, and then came back to the previous day's open. So these gaps and previous day closes are really, really valuable mechanisms for trading, for your trading strategy. Okay, so bigger picture. Tomorrow I'm not around, spending time with family tomorrow. And so what I'm seeing in the market is I'm seeing most of the big moves done and dusted. So not expecting too much tomorrow. So you can see the Dow has at long last closed its gap. A little frustrated I didn't get the full scope of this. I've actually adapted some of my charts, one of my charts, to very, very closely monitor these patterns. We had a sell signal on Tuesday, and then Wednesday we got the gift of the drop. So now any retests of around the 800 mark are potentially going to struggle. Let's see how that goes. But this market needed a dip. Just sort of fell asleep at the wheel a bit and got so used to this range-bound market that we had after this push up on the 25th. So I will do my utmost to make sure that doesn't happen again and keep you all in line with that. One of our members has very kindly done an extensive amount of research on the Open Trading Range, and we will be sharing that with you members very soon. It's really interesting. It just endorses what I've been teaching, and I think the data should help reinforce what we are doing in the trading room and try and make us a little sharper in the process. So I'll be sharing that with you very soon. So Dow, off of resistance down into support. Pound, just struggling under this resistance now. I'll take that off. It is a potential three-wave reversal. Could get shaky as the election gets closer. Who knows? But you can see at the moment these are the fibs that are playing out on this. These are the fibs they appear to be using. So if we close above 130.60 anytime soon, then expect to see 135 is the next stop. And here is the Brexit bar up here. So at some stage I expect at least a push into 140. But we've got a lot to get through, a lot of congestion, and this is a big barrier because of firewall just above us. So if we fail here, then expect retracements down to that 125. Okay, so the market needs to tell us what it wants to do, but we are getting a little bit hesitant up here, to say the least. I think my favourite chart at the moment is this CAD yen. If all goes well, then I think the CAD yen can really start to pick up. So I hope, in some respects, I hope it breaks this support and dips down to 78.35. We've got a lot of CAD data tomorrow. There's not a lot of data tomorrow, but there is in the CAD. So that could be one to watch. If you're going to trade anything tomorrow, then watch this one. And any moves back into this 81 area, if you get a buy signal down there, is possibly a good way to trade this up to 83, 84, 85. Okay, why do I say that? Why am I so keen on this chart? One of the reasons why I'm so keen on this chart is because of this very clean move up here. Back in the last year and the start of this year. So if this holds, if this 80-80 holds, and we can start closing higher here, then expect some higher numbers. All right. Let's talk about commodities. So I think there's some very interesting things happening in commodities. Gold. A lot of fear crept into the markets yesterday, and today that this gold is settling back. So any retest of 1230, which we're not far off now, is a possible buy. Silver has had a great run, a lot of profit taking. I'm getting ready for wave 3. I think we've had wave 1. We're in the process of getting wave 2. I think wave 3 will originate from about 1625, 1630. So I'm going to set an alarm for 1630 and wait for that. Why is that not coming up? Okay. So for those of you who are not too familiar enough for Elliott wave, this is wave 1. We're in the process of wave 2. If wave 2 can come down and test here, I think the third wave, a lot of traders who've missed out on this or been in it and taken profits and want to reload, then I think this is the kind of area where they're potentially going to reload for a possible move to 1740.50 to come in line with this 50% and this 200-day moving average. These commodities do tend to sort of gravitate around the mean. So this was gravitating until we got this big drop here and got extended to the downside. But over this period here, all we were doing is just gravitating towards the average. hence the reason why 200-day moving averages are very, very important. So this is a sell signal, new high, close below next day. We've got a sell signal, but I am waiting. One of the other commodities I am very, very interested in is the beans. I'm glad they're having a bad day because I want them lower. Let me clean this chart up. Okay, so we have had a nice move up here, drops, moves up, drops. Again, here's the 200-day moving average. Got two extended up here, came back to the mean, came underneath it, gravitated around it, and then we got this push underneath it. So at the moment we are getting a sell signal. So I would ideally love something closer to $9. But what I think is going to happen is I think we're going to just come into possibly 9.25, and then come and retest this area here at, yeah, this is 9.25. Sorry, this area here is 9.25. I'd love it to come on, down to 9, and then potentially, as the growing season gets underway and we get some weather reports out, and we start getting some reports on yields, then if that attracts the buyers and the buyers tell us what they want to do down here, then I would look to get in and see if I can get up to at least 10, and who knows, maybe even a run to 12. But not touching it right now, just letting it play out, and then we'll see what goes on. I have been trading a little bit of sugar, and sugar has broken up through the 20, and we are now looking as if we're going to put a little hammer-like bar on there. Would I touch it? I think the fact that this does have a relationship with oil, because if sugar gets cheap, stocks are diverted away from the sweetener market into ethanol production, if they can get a higher price for ethanol production over and above the sweetener market. So that's why there's a correlation between this and oil. So if we hold here, it's possible this may start to drift a bit higher, but on the whole, the market is not a particularly happy one, and it's a bit sloppy. So I'm not busting a gut to get in that market unless I see some stronger signals. I think that's all I've got for you now. Let's just look at a couple of stocks. I am looking for any highs in these stocks to short. I've been talking about Sears or stocks like Sears, including Sears, for a while. When they took it up here in middle of May, it was a sell zone. They sold it, immediately closed it lower, and here we are back down here. I would not buy this stock. I would only ever short it. So any test of 988 is a good place to get short. Those of you who are veteran members will have known me talk about Macy's. These retailers this is a really good sector to be a bear raider in. I think a lot of these stocks that are currently sitting up may not be sitting up for too much longer. So look at this one, Kroger, pushes up into a sell zone at 30.70. Literally the retracement back down to the area from the 3rd of March, and here we are back down to support again. So any of these highs are getting sold into. So I'm looking for anything that's poking its head up, so that we can raid it. And I'm not seeing anything too interesting at the moment. That's vulnerable. Cost. I would like to see some sort of gap fill. It's a very gappy stock, isn't it? Have to be ultra careful with gappy stocks. Target, nothing doing at the moment. Even something like Burlington. Sorry about that, but anyway, I'm monitoring this and I will update you on this, but stay glued and I'll do my best to try and capture some moves in this. Alright, thanks very much and bye for now.